Hey everyone, and welcome back to the channel. If you've spent even 5 minutes in the world of crypto, you've definitely heard of the two biggest names in the game, Bitcoin and Ethereum. They're like the titans of the digital currency universe. But what's the actual difference between them? Is one better than the other? Today we're diving deep to demystify these two giants. Think of it like this. If Bitcoin is digital gold, Ethereum is like a global, decentralized computer. Stick around, because understanding this difference is key to understanding the entire crypto landscape. Let's start with the OG, the one that started it all, Bitcoin. Launched back in 2009 by the mysterious Satoshi Nakamoto, Bitcoin was created to be a peer-to-peer electronic cash system. Its main goal was to create a currency that wasn't controlled by any government or bank. You could send value directly from one person to another, anywhere in the world, without needing a middleman. This was revolutionary. The core idea behind Bitcoin is to be a secure store of value and a medium of exchange. It's often called digital gold, because like gold, it's scarce. There will only ever be 21 million Bitcoin in existence, and this scarcity is hard-coded into its protocol. This finite supply is a major reason why many people see it as a hedge against inflation, similar to how they might view physical gold. So, in a nutshell, Bitcoin's primary purpose is to be sound, decentralized money. Now, let's talk about Ethereum. Ethereum came onto the scene in 2015, created by a young programmer named Vitalik Buterin. Vitalik and his co-founders saw Bitcoin's potential, but thought its blockchain technology could be used for so much more than just financial transactions. They didn't just want to create a cryptocurrency, they wanted to build a platform. So, what does that mean? Ethereum introduced something called smart contracts. These are self-executing contracts with the terms of the agreement written directly into code. Think of it like a digital vending machine. You put in the right amount of money, crypto, and the machine automatically dispenses your snack or executes the contract. No cashier, no intermediary, just code. This single innovation opened up a whole new world of possibilities. This is where we get to the core difference. Bitcoin's blockchain is essentially a ledger, a record book of all Bitcoin transactions. It's incredibly secure and robust, but it's designed to do one thing really well: track the ownership of Bitcoin. Ethereum's blockchain, on the other hand, is much more flexible. Thanks to smart contracts, developers can build decentralized applications, or dApps, directly on the Ethereum network. These dApps can be anything: financial services, games, social media platforms, digital art markets, and more. Ethereum provides the foundational layer, the global computer, for all these applications to run on without being controlled by a single company. Its native cryptocurrency, Ether or ETH, is the fuel that powers this network. Every time you run a smart contract or make a transaction on Ethereum, you have to pay a small fee called gas in ETH. This is what incentivizes miners and now validators to keep the network running. Let's look at a practical example to make this clearer. Imagine you want to send $100 to a friend. With Bitcoin, you would send the equivalent amount of BTC from your wallet to theirs. The network confirms the transaction, and it's recorded on the Bitcoin ledger. Simple and secure. Now let's say you want to do something more complex on Ethereum. Maybe you want to take out a loan without going to a bank. You could use a decentralized finance, or DeFi, dApp built on Ethereum. You'd lock up some of your own crypto as collateral in a smart contract, and in return, the smart contract would automatically lend you a different cryptocurrency. The rules of the loan, the interest rate, the repayment schedule, are all embedded in the code. The entire process happens automatically, without a loan officer or a bank's approval. This is something that simply isn't possible on the Bitcoin network in its current form. Another major difference lies in their technical foundations and evolution. Both started with a proof-of-work consensus mechanism, where powerful computers, or miners, compete to solve complex puzzles, to validate transactions, and add new blocks to the chain. This process is very secure, but consumes a massive amount of energy. This is a common criticism you hear about Bitcoin. However, Ethereum has recently undergone a massive upgrade called the merge. It transitioned from proof-of-work to a new system called proof-of-stake. Instead of miners, the network is now secured by validators, who stake or lock up their own ETH to participate. This new system is incredibly energy efficient, using about 95% less energy than the old one. This makes Ethereum a much greener technology and also changes its economic model. Bitcoin, for now, remains committed to proof of work, prioritizing its proven security and immutability above all else. So, what does this mean for their respective cryptocurrencies, BTC and Ether? Bitcoin, or BTC, is seen primarily as an asset, a store of value. People buy and hold it, hoping its value will increase over time due to its scarcity. Ether, or ETH, has a dual role. Yes, it's also a speculative asset that people trade, but its primary utility is as the gas for the Ethereum network. The more people use dApps on Ethereum, the more demand there is for ETH to pay for transaction fees. This makes ETH's value more tied to the utility and growth of its entire ecosystem. If you believe the future is in decentralized applications, NFTs and DeFi, you might see more potential in Ethereum. If you believe the most important thing is a truly decentralized, censorship-resistant form of money, you might lean more towards Bitcoin. So, which one is better? That's the million-dollar question, and honestly, there's no right answer. It's not really a competition. They are designed for different purposes and can coexist. Bitcoin aims to be the best form of digital money and a store of value. Ethereum aims to be the foundation for a new, decentralized internet. Asking which is better is like asking if gold is better than the internet. They serve completely different functions. Many people in the crypto space actually own both, believing in both the vision of digital gold and the potential of a decentralized world computer. The best investment for you depends entirely on your personal beliefs, risk tolerance, and what you think the future holds for this technology. To wrap it all up, let's do a quick recap. Bitcoin. The first, a peer-to-peer digital currency, a store of value, digital gold. Its blockchain is a secure ledger for BTC transactions. Ethereum, a global programmable blockchain for building decentralized applications. Its currency, Ether, is the fuel for this ecosystem. Bitcoin is focused on being sound money. Ethereum is focused on enabling a new generation of applications. Understanding this fundamental difference is the first and most important step to navigating the exciting and complex world of cryptocurrencies. They represent two different, powerful visions for the future of digital technology. I hope this breakdown helped clear things up for you. The crypto world can be confusing, but it's also incredibly fascinating. If you found this video helpful, please give it a thumbs up and hit that subscribe button. We've got a lot more content like this coming your way to help you make sense of it all. Let me know in the comments which one you're more excited about, Bitcoin or Ethereum, and why. Thanks for watching, and I'll see you in the next video.